Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's keep up the analysis of the euro currency. Performance of the market is not very fast, as you could see recent couple of sessions. So it's because of lots of different contradictory information, was as in geopolitics, as in the financial sphere. So this market was just a bit confusing and just don't know in what direction it should move. So here I would like to show you a few tricky moments that we have on the euro currency that maybe could help you somehow to make the decision. So in general, if we will speak about the current week, our suggestion that the market should show some bounce up from the 113, 112.64 area, just because this is the strong technical support, and that has happened. So you can see the market showing the bounce up. So potentially, when we stand very a bit tricky and difficult times, like we stand right now, that's just a common rule that we could follow when we're playing some trade. So just follow the strong technical moments. So if you have the strong support area accompanied with the oversold, this is more or less reliable that at least maybe let market show the bounce and let you to move stops to the break even. If even you will not get the final target or the price behavior that you would like to see, for instance, strong upward reversal, upward continuation, but this bounce saves you money. And you just, after the moving stops to the break even, you just could see what will happen. In the current situation on the euro currency, I do not like the few moments. Recently, a couple of days ago, I already talked about the dollar index performance. And now we have another interesting thing that we have on the dollar index. I will show you. Recently, we've got this bullish grabber that has been formed. So accompanied with this bullish reversal bar, because market created new lows, actually washing, rinsing all lows that have been formed within the previous week, close above the top of the same range. This is bullish upward reversal candle. Now, when the market has shown some minor continuation, we've got the bullish grabber. This is not really superb type of grabber. You know that we prefer the grabbers usually in the same direction of the trend, like here. Because the trend stands bearish, market forms the grabber and market collapsed. Here is a bit different way, so trend just has turned bullish and market forming the grabber. So, but this pattern brings uncertainty and weakness in the bullish picture on the euro currency. Because on the dollar index, we have two candles that point on a different direction. This suggests upward continuation. This one as well suggests taking out of the stop, which means that on the euro currency, if you intend to take the long position, well, you should be very careful, or maybe even it would be better to sit on the hands and watch what will happen. Because currently it really could happen that we will get another spike down before maybe reaction starts, maybe not. But whatever will happen later, here, there's really a big chance exists that maybe we will get this action. Besides, based on the shape of the suggested pattern that we are watching, it's kind of the hand and shoulders, so it shows that right arm might be a bit deeper compared to this one. So that's what we could talk about on the daily chart. On the 4-hour time frame chart, there's nothing really very interesting. Yes, we have this choppy action. In fact, our suggestion that market could show the upward action with the minor hand and shoulders pattern that have been formed recently has been completed. Indeed, market has tried to move higher, but it was not able to proceed and then dropped. Unfortunately, we haven't got the bullish grabber here, which maybe can't be used as a cornerstone for analysis, but at least it's something that we could rely on if you would like to take the long position. And this type of action that we see here, and all things that we said on the daily chart, makes me think, especially with this performance, guys, as well, makes me think that we could get this type of action. It might be the butterfly. So it is relatively simple to deal with the pattern because invalidation pattern of the butterfly stands right above this top. So with market action above it, it will be raised and it will suggest that market is going higher and we could get larger A, B, C, top, D pattern to the upside. Maybe it will be indeed the starting point of upward action. It's also possible hand shoulders could start, but in current environment, I've not excluded the chance that we could get another drop down. Besides, you can see that the butterfly 1618 extensions 112.10 approximately, it very nicely agrees with the next XOP target, it's 1215 area. So that's why I wouldn't withdraw it of the table that it can't be formed, especially with the grabber that we have on dollar index. So here's the choices up to you actually. If you have the bullish view, theoretically you could try to take position somewhere with the stops below this area or that area, hoping that market raise the butterfly and start and keep going higher. If you'd like to take the short position, this is even more simple. You could just try to use the butterfly and place stop above this area. Another moment that personally I am not really very satisfied with, so if you would calculate the ABCD pattern here, you will see that market barely hasn't quite reached the OP. It stands slightly higher. So it's also not very good, and this market here is actually a reversal swing has been formed, so this drops relatively strong. So all this stuff, well, this is just add more points to the bearish context. And finally, if we'll take a look at the cross-market analysis, what we see, bullish signs on the dollar index, rally, upward action on the gold. Those of you who are watching for our gold analysis, yesterday we said that market could keep going higher. And if we'll take a look at recent performance, you could see what will happen with the gold market. So gold market is moving higher, although a dollar is not dropping, which is also signs of some, well, hardly this is geopolitics, but probably something around inflation. So in the United States. And also if we'll take a look at the interest rates, they're also not dropping. So actually they are showing some consolidation above the 127 butterfly target. We see this consolidation, and recently market, well, mostly stands flat. And we suggest that it might keep going to the 1216 target. So with the simultaneous interest rates, real interest rates are rising. So you can see that the 30-year Treasury Inflation Index security already stands in the positive area. So it already stands above the zero. So this is our prediction, which is negative for the gold, but as you can see, gold actually since the end of the January is going higher together with the interest rates. This is effect of the geopolitical tensions. Currently, guys, another tricky moment exists with changing the attention of the investor. So if within a couple of weeks previously we heard only Ukraine, now this invasion hasn't happened, as we suggested, and now this is really a bad thing for United States government authorities, because investors start to talk inflation. So, and with the trying to dig this topic deeper to understand the background of the events, what's really going on there, well, that may be some reassessment of the inflationary pressure in the United States in upward direction, we suspect. Currently, it really could happen. Also, it's a bit ultimate view, but maybe if even the Fed will rise rate for 75 basis points or even for the whole point, for the whole percent, it might be not enough in March. So, and today is also James Bullard will speak. As you know, he is most hawkish member of the Open Market Committee. So, it seems that based on the price behavior that we see the gold is rising, so it means that currently markets still undervalue the real inflation that stands in the United States, and that gradually is becoming more evident, which is, well, not good for Joe Biden administration, for Federal Reserve, and so on. So let's keep watching what will happen. But currently, as a bottom line, speaking on the euro currencies, since we're mostly dealing with the euro, I am not sure that in these circumstances it's a good idea for taking the long position here. Personally, I'm somehow gravitating more to the bearish scenario here, mostly because of the action on the dollar index. But that's just my personal view. I might be wrong. So let's keep watching what will happen, because the situation really becomes interesting, and it should be even more interesting if we will not get any new geopolitical tricks. So market will be able to focus purely on the financial background.